All right, welcome back. Had quite a day today in the markets. Hope everyone's doing well. Kind of wanted to go over, the market being down quite a bit. I was actually up today. I want to go over why and how that was, and kind of my views and some new positions and things I'm thinking about in general. If you don't know who I am, I'm Ben Collins, CFA charter holder, Chief Investment Officer, Options Autopilot, which is an automated options trading platform. If you want some more info on that, find out the link description below. We're currently integrated with TastyTrade and Schwab, and you can get a $45 trial for a month. But let's just dive into the markets in general. Obviously, we had quite a bit of a sell-off today after news on Greenland and some of these headlines. At least seemingly that was potentially the cause. Trump came out and talked about wanting to buy Greenland and potentially forcing a purchase of Greenland, which seemingly not very popular with the market. Again, anything that usually introduces, some more risk or uncertainty in the market is going to be something that the market dislikes because it kind of interferes with more predictable things, right? As much as I guess it can be predicted. So that seemed to spook the market today, and we were down. If anyone kind of recalls, this is maybe going to seem coincidental, but I had talked about, I'm kind of fairly short Vega with my 111 trades, and I was kind of anticipating maybe a sell-off this year, which again doesn't usually pay to anticipate crashes because they're usually limited and not really sustainable. The only time that really truly paid off, obviously outside of crisis stuff like COVID and 08-09 timeframe, is 2022 is kind of sustained drawdown. Going into this year, valuations were kind of high. So I was kind of saying, kind of felt a little bit like 21 into 22. I don't know if that'll truly be the case because now the market seems to be differentiating between some of these AI firms that got pushed up and other stocks in the market. So it could be just a differentiated time frame in the market. But if we do get kind of maybe a reason that people want to sell, maybe this will be a buying opportunity in general. But so anyways, I was kind of leaning so short Vega. I didn't necessarily like that because VIX was very low. So I wanted to kind of hedge myself / guard myself against a spike in the VIX, which we kind of now got on this news and kind of today. You can kind of see, and I'll kind of go over what my thought process was when I did. I basically just bought a long-term put spread. And the reason I did that is because all the 111s are, which I have on here, they're basically slightly long and they're very short Vega. So they're betting on volatility decline. And these are all the automations, right? So these are just automatically going on. And my thought is, and a lot of times the way that people do this, or what's called a calendar, if anyone knows what a calendar is, if not, it's on Options Autopilot. We have a course on trades. But basically, the idea is that you're long a long-dated option, and then you're shorting another option against that. And so that reduces your theta or keeps you still short theta, so you're collecting premium over time, but then you're less exposed to volatility spikes. And my thought process is I did this on ES because it's 10 times larger than MES, and I was already long approximately, I think at the time I did it, it was like 74 delta. I take that back. It might have been 60 some delta because now this has increased as the market has gone against me. So it's closer to what my short deltas are on my long put spread. So you can see I basically bought a 304-day long put spread, 6,700 by 6,000. So basically a 700-point spread. And so I think, let's look at it. Also, just when you're looking at this, the P&L on the day is inaccurate right now because the market closed and reopened for futures. So it looks like maybe if I choose this, market's up a little bit after hours in the futures market, And so this is obviously up some, but the bid-ask spread is wide, so it's probably not that accurate. And this is down some, right? But effectively, this one's close to what it was during the day. So I was up about $1,000 or $1,100 on this put spread, and then I was down approximately $1,000 or $1,100. It was about even with these two positions. And typically today I would have had two more 111s go off. They got prevented from detecting some other legs. I was kind of okay with that because there's some uncertainty going on. I think we have some time for the market to digest this information and like figure out what it wants to do with it. So I was okay with it not going off. I technically don't have anything going off tomorrow, but then it will resume Thursday, Friday, which I think will be good. Again, I'm not trying to time it. I'm just letting the schedule go. I haven't adjusted that at all. And I'm just going to try and leave this on. So the tough thing is right now I'm up $1,100. It makes me kind of want to take it off. But I think that there's enough uncertainty out there right now that nothing is really known or resolved. So I'm just going to kind of keep it going because ultimately I know I'm going to have a bunch more one-on-ones open. And as they do, then obviously I'll get more long again and more long than this. The difference here, and it's both good and bad, is because this is ES, it's a higher multiple or the contract's larger, so the moves are more exaggerated dollar-wise. So it's possible if we get like a really big snapback, I could lose more on this put spread than I could gain on my MES. But the idea is that since I'll be selling more over time, I should be gaining more on my MES positions. And as the market is potentially falling, if it does continue, I'm not saying it will, if for some reason it does continue to fall, again, the whole point of the automation, the benefit of automation in general is that it'll basically just keep selling these one-on-ones below the market. And since I'm both long the put spread and I'm just constantly selling volatility below the market, that should work out over time. In general, if the annoying thing is I wish I could separate out ES versus MES in terms of capital requirement, because I kind of wanted to go over why I'm doing this, because this is kind of the only discretionary thing I'm doing from the index standpoint. I think the capital requirement on my ES position, my long put spread, is almost $4,000 or a little over $3,000. And the reason I did that is because, again, I remember I'm targeting $3,000 a month for a rent payment. And in general, if I give up $3,000 over an entire year, but I have the ability to, I think the potential payoff was like $27,000. Again, that's a worst case scenario if the market fell and finished the end of the year down at $6,000, right? That'd be like perfect. I don't think that's going to technically happen. So, but in general, over time, it's just going to keep selling these one-on-ones and countering the cost of that long put spread that I'm using basically as a hedge. And that is the whole point. The other thing I want to show here is because you can see I've had this open for a week, and I'm going to go over. So delta versus theta, right? So see how this is only minus 2.97. So I'm losing $3 a day, but I theoretically am making $118. So the reason I'm pointing this out is because if I was going to buy just a put, just a long put, my theta decay was almost equivalent to what I was on my one-on-one trades, which is not what we want, right? It's not really, this is not there to totally take a directional play. It's supposed to see I'm long Vega, so I'm trying to cut down my short Vega exposure, but then not totally impact my theta premium decay, right? I want to collect this on a daily basis or a monthly basis. That's the whole point of doing these, but I'm trying to kind of reduce my exposure. And again, I can't predict that. I just happen to put it on in kind of at a decent time. If we look at VIX, and again, this was sort of what was informing me. I was just feeling a little bit like the market was extended / not appreciating some of the geopolitical stuff that's going on. So you can see it spiked up quite a bit, technically 6.63%. I want to say that's actually lower than it is. But anyways, you can see it's back to almost the typical long-term average. I think it's possible if we get some more negative news or negative earnings, we could see this come up to these levels. If that's the case, again, I'm just going to be still having the automation run. It's going to be selling premium, and it'll ultimately average out. Again, it should over the very long term be around this 20 VIX level on average. So if that happens, I will be glad to collect that premium in the long term. So that is how I was actually able to be up today, because that kept me approximately flat. And then I also want to go over Intel, kind of positioned for how I'm positioned for earnings. SOFI, and if you've been following along, you'll notice RIVN is no longer in here. And I did talk about this as to when I was going to cut it. I actually cut it sooner than I had planned, just because I had already talked about it, saying, I don't know what the catalyst would be in the near term. I think there's some headwinds. And I was kind of watching this upward sloping trend line. So basically, when it dropped and broke this trend line, I did cut it here. Again, so far it's been the correct move. Doesn't mean it will not rebound, because today down 3%, but it didn't like totally collapse with the rest of the market. So we'll see what happens there. If it finds some support in here, we'll see what goes on. But in general, I think it might have a tough time. Again, I like the company. I just don't know if their automation and the stuff about the chips is really going to come to fruition very quickly. And they don't have a ton of levers to pull to get exponential return that I'm aware of at this point, like Tesla, like they have with their AI and robots and all these types of things that are not really related to a car company, but obviously drives value for the firm. Sure, they have automated driving packages that they're going to roll out, but like with most things, some of those are slower to roll out, and maybe adoption rates don't happen as quickly as you might expect. So we'll see what happens with RIVN. So still willing to consider it longer term, but for now we are out of it and not necessarily looking to get in. But make sure you subscribe, follow along. I'll update if we get back in. SOFI, again, we're just keeping our current 5 contracts on. If you recall, I'm basically not usually adding to any of these long positions until I'm profitable. And so far, year to date, I'm not profitable. I was significantly profitable last year, but I'm kind of viewing it as a brand new trade now. I still like the company. I still think it's going to go higher long term. But as of right now, the market is telling me I'm wrong, so I'm not adding it. Again, it's not like stock. I would be dollar cost averaging if I'm just long the equity. But because of the options, I've just learned over the years that usually if the market's telling me I'm wrong and I'm down money on my position, I probably shouldn't be adding to it, because it doesn't recover like stock does, and that's because of the Greeks in general. Again, this is not totally positive in terms of, this kind of looks more toppy than forming like a base to continue. This is a pretty big line in the sand because this was like a previous significant high that it finally broke out above. And I was really hoping it was going to rip to the upside. My computer is going so slow, it's very annoying. But so basically, I was trying to see if this would rip higher. But it's looking like it just wants to consolidate for now. If it breaks down below this 24-ish level or the previous high, then I'll probably exit. Again, because the market's telling me that it disagrees, right? Bigger money is pushing it lower. So I don't necessarily want to fight that trend if there isn't demand there. And then I'll look for it to recapture this level if I was going to get back in. But so yeah, remains to be seen what happens there. I think it's well positioned, but if for some reason that economy starts to turn down, or they feel like the market feels like it's not going to benefit from the current environment, Coincidentally, rates have gone higher. That doesn't help mortgage refinances or any of these types of things that might help credit-related companies. So I'm just kind of waiting to see here. Intel made some adjustments today. I didn't go against what I was saying, but I kind of took into account the timing of earnings. So earnings is tomorrow, 22nd. And what I said I was going to do is if I got up $5,000 profit, I would add another contract or add to my position. And then if it closed above 50 significantly, I would probably double my position. So it was pushing up higher today, which is beneficial because the rest of the market was off. So that's showing some relative strength, significant relative strength in general. Because earnings is tomorrow, and that's usually just a coin flip. You just don't necessarily know. I decided to mostly hedge my position just because volatility crush after earnings is pretty significant. I didn't want to add to my position. I considered rolling it, so basically rolling up. So I have a 50 strike calls right now, and I was going to roll it up to 55, but I did not do that. I figured the best way was just to kind of sell some shorter dated calls while it was elevated. So again, I did this during the day and it was fairly timely. Again, I didn't have any insights to time this. It was just the fact that I've seen this stuff play out and it could have just continued to rip higher. I was just trying to commit to kind of hedging my position and cutting down my delta exposure because right now I'm down to 245. If you recall, I was up past 500 effective shares basically, just because the way I structured this, if it rips higher, I have $10 of upside potential plus the premium. So I effectively have almost $13 of upside potential still. And this should collapse a lot faster than these do after earnings. So if it goes against me, my hope is that this absorbs a decent amount of the loss against my other options. So we'll wait to see what happens there. I was making the joke that, usually if I'm going just full long, it'll miss earnings or it'll collapse. But as soon as I hedge it, watch it have like a 30-point move to the upside because it's some crazy news or Trump says something. But like I said, in general, I still have about $13 of upside potential in this position. So I could theoretically still gain probably another 10 grand on this position, right? And I'm up $5,200 year to date on it. And I was up a decent amount last year. I still think this is going to continue long term. I almost would prefer it pull back a little bit and take a breather. And I would pull these off or just let them expire. And then I'll be, fully long again. We'll see. That remains to be seen. Again, subscribe if you want to see how I adjust this. But the reason I'm doing it again is because volatility is not in your favor over earnings at all. And that is why I did that. So you can actually see, again, my theta is actually now positive, and I'm holding long calls and long directional exposure. So because I sold those other calls at a reasonable time and just in general because volatility is so elevated, I'm collecting money each day as I hold my long position. And then I'm technically still long volatility, which is not helpful over earnings, but I've significantly cut this down by quite a bit by selling these calls against it. So that was my reasoning there and how I basically did that. How you can see year-to-date gains up $4,234. I think last time we looked at it was $3,800 in general. So still moving in the right direction, but nothing crazy. You can see down on the automations year to date, up a little from here, but down on these. So approximately $680 negative so far. So going to be tough to hit 3,000 for the rent if this trend continues because we're already past midway. So I doubt that we will. I don't think I have enough positions on to hit 3,000. But again, this is helpful. Counter it, but that's not the point. I'm not trying to make the gains off of the hedges. I'm just trying to be smart about it. The other reason I did this hedge is because it's the beginning of the year. And again, if I'm looking at it from a P&L on a calendar year basis, probably better to do the hedge initially because of the returns are negative early on. Then it makes it a bit harder to recover versus in this scenario, it's mostly flat at this point. So, and then long term, it shouldn't be as detrimental if the market continues to either go higher or go lower. So that's kind of why I did that also. I guess, yeah, you can see how Rivian, I lost $1,300 on that position in general. So I was up a little, I think I was up a little bit last year, now down a little bit. It's kind of gone nowhere, and which is kind of annoying because I think at certain points I was up quite significantly. But I was just trying to let it run. So that is pretty much it for those current positions. Intel will be interesting tomorrow, so stay tuned. I'll do another video updating what happens and how I either adjust or change my position on Intel. Again, I do think it has some tailwinds, both from administration and just maybe fundamentals. Again, I hope that doesn't happen, but if China takes over Taiwan, you could see, it's our only game in town potentially of manufacturing and all these types of critical things that the administration is talking about. Don't necessarily disagree with those opinions on it, but again, they're kind of choosing winners and losers. I did want to talk about some interesting, at least I think it's interesting. I guess Bitcoin is just kind of continuing the put credit spread is just automated and it's kind of going. It's up a little bit, but I partially feel like it's going to sell off here, but it doesn't really matter. I'm just going to leave it on. MicroStrategy or strategy, we've kind of talked about this. I partially feel like he's getting to a point where he might have to sell some Bitcoin. And I think if that happens, it could honestly be bad for the company and bad for Bitcoin. I wonder ratio. Let's do this. Didn't really plan this out, but I wanted to see, okay, BTC metrics strategy. I don't know if this is on, yeah, this is what I'm looking for. I think they have some type of coverage. It's interesting that this is literally the first time I've looked at this. There's some type of ratio that if it drops below 0.9, I believe, then they have to start selling. And I don't exactly know what I'm looking for at this point. I'll just have to try and find it tonight. But my point being, I thought someone had said that they're kind of break even point. I don't know. I don't think this is it. The ratio, okay. It was like 0.9, so maybe it's under assets. Whatever. I'm not going to waste a ton of time. The point being is, if it breaks below like 0.9, there's something in there that I think they have to liquidate some Bitcoin and up their reserves. I talked about it historically on the channel before. I think you can kind of see it's hanging down here, and Bitcoin is not as low, right, as strategy. But I think it's basically if it breaks below $80,000 on Bitcoin and it starts to go lower, then you could see some kind of forced selling by strategy, and they're obviously one of the biggest holders. And if they start to do that, I think that it's like hard to imagine a scenario where they almost don't create their own demise, because if they're going to force sell in the market, and the market knows that, there's probably some funds that are going to pile on there and force it down even further. I think at a certain point, people will buy it because they've been out of the game or they've been out of Bitcoin and it's an opportunity for them to buy. But you could see kind of a downdraft there. And it's like, well, if you're already below 0.9 and then you're selling and driving the price down, can you get back above that ratio? Again, I know that you can. I'm just curious how that will play out, if it does. I'm not necessarily predicting that it will, but if it does, I think it could be a good buying opportunity for Bitcoin itself if it kind of gets a forced liquidation just because of strategy sell-off, for example. If it fell to the 50,000 level, I mean that sounds kind of insane. I think that would definitely probably be a good long-term buying opportunity. But that's just something that could also kind of spark a sell-off too, because I'm sure there's quite a few levered long Bitcoin positions in the market in general. So we'll see what happens there with Bitcoin and with strategy. So I'll try and find those metrics that I was looking for and what they need to maintain for their overall portfolio. And I can kind of do that on the next video and kind of go over it because I think it is kind of interesting and something that I think people need to keep in mind. It's not just a free money printer, basically, like it seemed like it was initially. So that is pretty much it. Just watching the market, waiting for Intel earnings. I think that could be pretty beneficial. We'll see what happens. And I'm just gonna keep my 111 automations going because no matter what happens, I'm not super exposed in any one position, right? I could get stopped out of any of these individual positions. Ultimately, I'm technically down on all of these individual positions at the moment. None of them I'm up on. Okay, except for this one, it looks like, if this is the full one. So it looks like I may be up slightly on one in general. But that was the other thing I also wanted to highlight. It's not all wins, right? Even though in general the win rate is pretty high. It's around 85%ish for the 111. This people need to understand, how this can go when the market goes against you. So, this is how it kind of looks. And again, it was down about $1,000 total during the day today. So just kind of keep that in mind as, even though it's all these individual positions that could get stopped out at various times, it doesn't feel good because they all are typically correlated, obviously, in the same direction. So, and they're all short Vega. So the Vega spike is probably more detrimental than the actual directional move. So people need to keep that in mind. Again, I'm fine with it. I kind of know this is possible. I think worst case scenario, I think I figured out and said it would be down about $7,500. Obviously, if that is the case, that would be very annoying. But if I can make $3,000 a month at an 85% win rate, I should come out ahead in the long term, and that's the whole game we're playing here. So appreciate everyone watching. Hope things are going well. And let me know if you have any comments, questions. Check out optionsautopilot.com. And if you want to try doing this as well, again, when volatility is higher, this is actually a good time to be selling vol. You have to, again, be risk managed. This is all for educational purposes. Don't follow what I'm doing. But you always want to manage your risk. And that is how you win the game in the long term. It's not YOLOing and short-term plays. Even though I do make directional bets, I'm just trying to focus on how I'm managing the risk and losing the least amount of money to try and make some money. So appreciate everyone watching, and we will catch you after Intel, and probably at the end of this week I'll do another update. So like, subscribe, appreciate it.